Sweet.
Hey everyone, my name's Andy. I'm from Finding Value Finance. I'll be your host today. We've got Traderferg with us. Wanted to bring him on, get his opinions on what he likes in the market. Haven't had him on for probably 6 months or more, I think. It's been quite a while. So, what are you looking at? Well, first off, thanks for coming on. I appreciate it.
Thanks for having me back on, Andy. I always love being here. I always love just talking shop with you. I think we see things in a very similar way. So yeah, it's always nice. Kind of confirmation bias. Everything's working.
So, what are you looking at now? What gets you interested? And do you still think the stuff that you're holding in energy and stuff like that still good, still okay? What are your thoughts?
Yeah, no, I'm still massive energy bull. Some of it's working really well. Others, I think it's hasn't quite hasn't quite inflected yet. Like some of the oil stuff still coming down the pipeline. Obviously, uranium's working quite well. Coal's doing kind of what it should. I think a lot of people had their expectations bit too lofty on the back of the sort of Russian invasion and the higher prices. But I think coal's going to be sort of a slow grind. It's how I've always described it. Like you buy these things cheap, you grind out good cash flow. They do buybacks, and you just make nice returns over time. It's not going to be as boom and bust as some of these other sectors. But yeah, recently I've become a bit. I've gone right down the rabbit hole with some metals like tin, and more recently I've really really got stuck into the platinum group metals, particularly like platinum, palladium, rhodium. So yeah, like we were discussing just offline before, I'm loving the setup there. The more I dug into it, the more I was like, yeah, this really makes sense. And yeah, so happy to dive into whichever of those you want to run with.
Obviously, the platinum group metals. I'm going to have to hit that one because I am very heavily invested in it, and I think we have researched and come probably to similar conclusions. What did you research? What exactly did you find when you looked into the platinum group metals? It can be any of them: platinum, palladium, rhodium, whatever it is. What did you find when you looked into it?
Yeah, so I always love kind of trying to bring up as many like sort of long-term forecast models and seeing what the market's where the market's thinking like supply and demand will land, and then seeing if I can sort of pick it apart, especially when you see something where there's going to be some deficits coming. Like is demand overinflated, or is it sort of underappreciating how strong demand would be? So the first I went to was actually some of the like North Nickel. Like they're one of the larger producers, super low cost. A lot of it's sort of been a byproduct. And I was like, what's in their numbers? And as we were talking about before, it's actually interesting. I've got like a whole slide, a whole page on how much of it was sort of a inventory dump on the back of sort of the Russian invasion. And so that kind of collapsed the price for somewhat of a like a non-economic reason, and doesn't really represent sort of production or supply moving forward. So that was interesting to start with. And then looking into their sort of projected demand. So they have palladium at a negative 1% growth rate out to 2030, and they had platinum at negative 2% out to 2030. And I was like, oh, like how do they arrive at those assumptions? And it's mostly on the back of the EV adoption, which makes sense because they're a big nickel company. They've got to push the narrative of massive EV ramp. But I'd already kind of, I've had a pretty strong view that the EV adoption's like the projections are massively inflated, and it's not going to ramp anywhere near those expectations. And if anything, its hybrids are actually ramping pretty rapidly. And what's interesting with hybrids is the if you dig into like BYD's numbers, they're selling about half. They're called plug-in hybrids. So this isn't the same as like a Prius where it's like the hybrids kind of all self-contained. You can't charge it in a wall, and so it's not, you can't get subsidies with it, and it doesn't fall into like the full. It's not a full battery vehicle, but it's like a plug-in hybrid, they call them. And so with BYD and half of its production being these plug-in hybrids, and they're the top two of the top three best-selling cars in China at the moment, they are actually requiring 10 to 15% more platinum, palladium, and rhodium for the catalytic converters. And so while a lot of these demand curves are saying that like battery vehicles are going to wipe the need for a catalytic converter for all this demand, here we're having the hybrids ramping rapidly, and they're actually increasing demand. And so I found that absolutely fascinating. And I was like, well, this is the kind of setup I love, especially when there seems to be like a big air pocket between the sort of super low cost, almost byproduct type cost curve of the Russians versus the really sort of high cost that we see across the rest of it, was pretty much all in South Africa, really, when you break it down. And yeah, sort of went right down the rabbit hole from there, and just liked what I saw. Super tight market, sort of deficits coming up, a lot of them cutting back production because they're below the cost curve currently. And yeah, as talked about this, see this demand just continually surprising, because it's also like a lot of the issues I see with whether it's EV projections or even renewables like wind and solar. It's just a love for projecting forward the initial ramp. And so I had Lewis Vincent Garve on my show probably 2-3 months ago, and he's got a research office in China. He's saying a lot of the actual straight battery vehicles, a lot of their demand's being driven by the state-owned entities. So they're just mandating you have to have full EVs, whereas it's the retail which are driving the hybrids, and there's a far longer runway for that, particularly across the developing world as well. Obviously, they're not really going to have much uptake in the US with the 100% tariff that just got slapped on as of a day or two ago. But that was never who they were going to sell to anyway. It was always going to be the sort of what Lewis sort of refers to as like the first time car buyer, someone that can actually buy one of these things because they're super cheap. They're like, you buy a pretty nice vehicle for around 10 grand. It's kind of crazy when you consider it. Like the quality they're knocking out for such a low price. And problem like here where I live in Indonesia is not a lot of people have a parking spot and like access to quality charging infrastructure. So you would never want to go full battery vehicle if you've only got if you can't fast charge it, then it's gonna take you over 12 hours to charge the thing, which is really inconvenient. So you want that flexibility of having a hybrid. And so I just think these are going to be where all the scale is. And if anyone wants to dig more into this, it's interesting to see what Toyota has been pushing out for the last, like they've been really steadfast saying hybrids are the future. Like battery vehicles are never going to make up more than a third of the passenger fleet. Like that's going to be the upper limit. It'll be hybrids that take over. And so if you forecast through that hybrid adoption, yeah, then that's an awful lot of demand for platinum group metals, which yeah, I was like, once I worked this out, I was like, I want some pretty hefty exposure to this. And that kind of you have to head to South Africa and sort for a few companies, and you can get a lot of talk to it with pretty much you've got with rhodium, you've got like 85% of global rhodium supplies all in South Africa. Yeah, and yeah, it's a great trade.
That setup in platinum group metals, I think that's the largest concentrated commodity in one area of any commodity. It's just almost all in South Africa, and the rest is in Russia. And if there's any sort of like geopolitical problems with Russia, I mean, it seems like that
That's
would be a huge thing. Or if a problem occurs in South Africa because it's so concentrated. I mean, Saudi Arabia produces 10% ish of world oil production. And then you've got South Africa that produces 70 to 80% of all the platinum group metals, depending on what you're looking at. I just think it's crazy,
yeah. So
crazy
I,
good
I
setup.
was trying to I was trying to find like a physical vehicle because I was like, it's got an amazing setup if you have not only have exposure, because then you've got to accept some risk in South Africa. Obviously, the place is it's a shit show within a circus. It's just like it's a bit of a mess. But if you could get the physical exposure, like you kind of hedge as well, because if anything were ever to happen that would bring a lot offline, um, you the physical would go absolutely berserk. But unfortunately, it's quite hard to do. Some of the vehicle, there's a physical rhodium vehicle, but it just has like a terrible trades with massive like bid offer spread and low liquidity. And yeah, it was a pity there isn't kind of like a spot physical uranium type play on like rhodium. That I would have been all over that. Yeah, because that would be such a clean way to express it.
Yeah, rhodium's only, I think it's only like a 1 million ounce market a year. I think
Yeah.
it's like a million, whatever it is. I can't remember the exact number. Um, so you're big into platinum group metals right now. At least that's kind of what you dove into. What are any other sectors that you're looking at that you've been researching that might be potential investments? Have you looked at something like a rare earth metal or anything like that, or any other sectors that you're looking at?
Yeah, so I had a deep dive was it like in 2021 on rare earth metals because I was like, yeah, this kind of like it's got a lot of similarities with what we're talking about with platinum, palladium, and like it's highly concentrated. But there's the big differences which make it almost uninvestable in my eyes, and that's the fact that China's kind of monopolized it. They understand the weapon that it is. Like they've blocked a lot of the IP coming out of it, how to even like all the sort of turn it into an alloy and a lot of the research going into it. It's the the amount that they subsidize it is just absurd. Like I think the easiest way to explain it was like a standard value add in a commodity should be sort of at least 200-300% if you're taking the raw ore and turning it into like a finished like alloy. So I think with steel, if you're taking iron ore to like finished product, it's like at least 300% markup, which makes sense with all the energy, all the labor, all the transport, everything. So the Chinese are doing rare earth ore into the alloy, and they were doing it for I think it was like a 10% value add, and so it's not even covering the energy cost of doing it. It's massively subsidized, and they understand the weapon that this is. So if you're buying rare earth companies, you're buying on the understanding that the West is going to wrap their head around this. They're going to lift the level of subsidization to match China and allow the economics to work. Otherwise, you're kind of like battling this negative economics. So there is definitely a case for like China will cut it off and you'll get a massive spike and you'll get rewarded that way. But I don't want to sit around in a miner hoping for that scenario. Like that's not a good enough reason for me just to sit there hoping for this call option, especially when we've got some great companies out there where you kind of get the call option and you also get the cash flow. Tin's a great example. You've got you can buy some of these things at almost coal type prices, and you've got like a call option on some sort of a real supply crisis happening. So you get the cash flow and you get the call option. Like what's not to love about that? Whereas rare earths, I struggle with it as well as even with all the rhetoric of us in the West sort of talking about bringing it in house. It's such a dirty process that it's you get tied up in all the environmental side of it as well. Like anyone wants sort of a history of it, you can look at Linus and the amount of sort of lawsuits and issues they've had in Malaysia. They like ramped up in Malaysia to sort of to make it work, and they were constantly getting lawsuits. I think even I haven't looked for a while, but their main facility in Malaysia was actually shut down. They sort of so they're trying to build a facility in Australia, and just imagine the cost and all the licenses that they'll need. So yeah, I completely passed on that, and also a lot of the best deposits have some uranium, which is just another uranium or thorium, which is another big headache because then you've got all the additional permitting around handling that material, which makes it really hard in the West. And the ones that don't have that in the deposits are actually quite inferior to what the Chinese are producing. So the economics are inferior, kind of like I think it's the Mountain Pass. And yeah, so I steered well clear of that.
Have you looked into gold and silver, and have you kind of warmed up to those metals at all?
Yes, I have a bit of exposure now. I kind of went with like the top of the cost curve. I just wanted someone that was kind of left for dead. The having a really high all-in sustaining cost just meant the market was like, screw these guys. Like gold or silver's been like below this cost for the last decade. This is going to keep hemorrhaging money. There's like almost PTSD whenever you look at the stock. It's just like, oh, this is just a just a dumpster fire. And with gold taking off recently, like it's I wanted a bit of that in the portfolio, particularly as well. Like I think when you dig into gold, like I just wrote a piece on it. It's a lot of things changed, especially with the sort of the confiscation of like the Russian assets and a lot of the correlations we've seen for a long time kind of broke down. And one of the more interesting ones is with GLD. Generally, when the gold price rises, more people buy GLD, which is kind of a proxy for like Western demand. Like, and yet, as the gold price rose, the issuance of GLD went down, which means it's like not Western driven at all. And so when you track it down, it's pretty much all coming from China and Japan to a certain extent. And yeah, that kind of makes me think like I want exposure if they're going to put a bid under it, and then at some point this will turn into sort of a momentum trade and all the West will jump on. And if you also kind of listen to a bit of like Luke Groman and Lewis Vince-Gov sort of saying that the gold is going to be essentially the new BRICS currency. It's going to be backing a lot of the trade moving forward because there's not enough trust in like the yuan or any developing market country, and so that's why they're storing it. So if you think of it in that way, then the price needs to expand for it to fulfill that role. And gold really is the only thing that can do it. Like everything else, you break markets. If you try to, like silver, if you tried to revalue silver, then it's obviously got quite a decent amount of industrial use, like solar and stuff. So you can't really do it. Whereas gold, you can revalue it significantly, and it doesn't break anything because it's just there to be kind of held as store of value. So yeah, I wanted a decent kicker to that, and so I'm officially joined the Gold Bug group.
Do you what's coming up in the future? Do you envision that all of these assets could go up together with maybe like a declining dollar? Like what do you think is coming kind of ahead of us? And I know sometimes it's really tough to predict. I don't like asking time and price questions because it's just no one gets it right. What do you think is coming? I mean, that's basically the question. You think we're going to get a weaker dollar that's kind of push all commodities higher, much like 2002? That bull market is when they lowered rates and then they just kicked the whole commodity bull market off. Do you think something like that could occur, or what do you think could occur, or you just don't don't know. We just know that these assets are cheap.
Yeah, I try not to sound too smart with the whole like. I've always been in awe of people that can talk about what rate cut the Fed will do in 6 months and like try and like sort of front run them on every word they say in every meeting, and like that's never been my game. I've got no advantage in there. All my overall take is when you just run the numbers, they're going to have to buy up a lot of debt moving forward. The dollar will take it on the nose, and it's going to be hugely inflationary moving forward. And that's pretty much as I dig into it. And then that just leads me back to commodities every time. I just want to protect purchasing power and stick with real assets, because it doesn't take much to realize that they're kind of increasingly cornering themselves, and there's no way out really other than buying up a lot of this debt, and it's probably all ending up on the Fed's balance sheet or stuck with banks. And yeah, I don't really try and get too technical other than that. And I listen to smart people that kind of like Luke Roman does a great job of this, and he's over all the details. Like I put a piece in Ferg's Finds a week or two ago where they've now taken off the essentially given banks the ability to buy as much debt as possible. Like there's no sort of I think it was I'm forgetting what leverage ratio it was that they've pretty much given them they can leverage up as much as they want with government debt. So that's kind of like QE on the bank's balance sheet. But yeah, I think the Fed will end up buying a lot of it. But yeah, I try not to sound too smart with it, because a lot of it I'm just parroting people I trusted, and the likes of Luke Roman and Lewis Vincent Garve can wax lyrical on this stuff for hours, and I just try and take away the summary of it.
Yeah, I don't know if it's that important anyway. As long as you get the general direction of inflation right, like if you have more inflation, this is how you want to position, and that's basically what I do. And then I don't try to time anything. I just pick off what's cheap and hold on to it. It's a very, very similar approach to you. When the opportunity arises and it looks good, I just buy it. So what else have you been looking at, or anything else, if you have anything else that you're looking at kind of at the markets right now? Anything that catches your interest, or anything that maybe doesn't look good? Or something that just says, man, I would, maybe some Kathy Wood stuff, or I don't know. But anything like that?
Yeah, I've always been a big offshore bull, and I've got some stuff right and some stuff wrong. And one of the ones that kind of annoyed me for getting so wrong was just understanding certain companies had shorter duration contracts, and so the cash flow will hit the balance sheet far quicker, and the market would just that inflect a lot quicker. And so what I'm talking about there is like the OSVs, the offshore service vehicles, with them having generally 3-6 months contracts, they've re-rated far quicker than the likes of like jackups with sort of a year plus, and then you got drill ships and semi-subs that have got it even longer. And I wish I'd kind of figured that out earlier, so it would have made more than kind of having sort of a more basket approach. But now that I have understood that, then kind of can go forward and say, oh, now that OSVs have really inflected, like who are the beneficiaries around jackups and drill ships that will really benefit when their cash flow starts to hit the bottom line? And so looking at more like the little service companies around them. There's a lot of like engineering companies in pretty small markets like Singapore and Hong Kong that have got solid balance sheets. They're completely unloved. Like we were talking about it before, like the chart that looks like the patient's died. Like you had a nice healthy heartbeat back in when sort of the 2010 to 14, and then it went all the way down, and then just dead the last few years. And then you open up the balance sheet, and some of them are heavily net cash, and they're just starting to show signs of life again. And I love that chart. And so I'm trying to make sure that I hopefully find the last of those before everything's obvious and they start to move, because you lose a lot of asymmetry from that sort of that dead period to the first sign of life. Like if something's going along at I don't know 10 cents, and then the first sign of life takes it up to 15, 20 cents, like you've lost an awful lot of asymmetry if that thing then goes on a tear. And so I'm trying not to miss those. What else have I? Yeah, tin. I was in a I bought into tin originally in 2021, wrote it up, and then got out, and love the setup I'm seeing again now. And so back in there, I just see big deficits going forward, and I see demand just been really, really, really steady growth, and the supply side is just a disaster. So and you can buy some of the companies dirt cheap with, as I was talking about before, you can buy them on cash flow, and they've got a massive kicker to if things really take off. So love that market as well. Yeah, that's really all I'm like focused on at the moment. Yeah, I'm just loving. I'm trying not to miss anything. Like if I can find so many things, kind of remind me a little bit of like uranium, where you just see like the supply side's a disaster, demand's gonna probably not shoot the lights out, but be like steady growth, and you can just pick up real assets that are everyone's underappreciating. Then I think you have a good outcome in the next 5 years.
Yeah, I agree. I don't really have too many more questions. I mean, I just kind of wanted to get a market pulse on it, see what you're looking at, see what you thought looked good. Is there anything else you'd like to share?
One that I, I've been tracking, and it was Go Rosen that brought it up originally, was just how gassy some of the shales are getting. And no, HFI just highlighted it again, just the like expansion of NGLs in the oil. And so because I was reading a piece from them earlier, they only put it out like a week ago, and it was some of the like it's hard to get any charts illustrating it, but the just the rate at which oil's decreasing and the gases are increasing per barrel of oil, and the implications of that, like of NGLs are lower energy content, so it's kind of like debasing a barrel of oil in a way. It's NGL's got a lot of ethane, which ends up as like plastic bags, doesn't it? Not even like really technically energy. And you have to kind of like dig into some of the company's report to see it. Like I think they were pointing out, if it was Diamondback, which their oil weighting dropped from like 74% 2017 to it's only 59% last year. And you can see this in like a longer term chart of it, where NGLs didn't really, like if you take it right back to the late 90s, NGLs didn't even like were only 1% or 2% of a barrel of oil, and forecast that right forward to today, and it's like up to 1/3 of a barrel of oil. And it's kind of important with if you come at it from the sort of energy return on investment angle, which was like the whole like Charles Hall side of things, is that we're using more energy to extract less as time goes on. And he had some really great charts sort of illustrating it. And then all his kind of work got largely forgotten when the shale boom happened, and we're like, oh, we're absolutely flooded with plentiful energy, like none of this matters. But if you bring up some of his work, it is still holding true that we're using more and more energy to extract less and less oil, and especially if you look at it in these terms. And I just find that interesting. and it doesn't seem to be getting much coverage. And Go Rosen wrote an interesting piece on it as well, saying that it's what you would see before shale really starts to roll over, is kind of like and the analogy they use is like a soda can, like as all the gas rises to the top, as you get to 50% of the way through the resource, and then you'd have the pretty heavy declines. And so I'm interested by that. I haven't got much insight with it really. I'm just watching it, and I find that interesting that there's not much written about it.
Yeah, I agree. I watched that too, and it does look like it's slowing down, is what I'll say.
Yeah.
I don't know if it's rolling over yet, but it does look like it's definitely slowing down, and it's potentially peaking. We'll see.
Yeah, well,
Which will
that's
be
the thing.
huge for energy investors. Just absolutely massive if that does peak.
Yeah, no, I think it's what everyone's watching. It's like the most important thing, and I think I've certainly been run over with it, sort of saying, "Oh, I think it's looks like it's topping out," and then it just continued to go on a tear the last year. But yeah, I'm still reasonably confident it is gonna roll over at some point. Not game to call when it will, but yes, it has massive implications when you consider it's pretty much all the additional oil growth it had the last decades. It's come from shale, and if that rolls over heavily, the world's not really prepared for it. And so, yeah, kind of positioning for that.
Yeah, and I don't really have anything else. I'm gonna have to get rolling here too. How can people follow you and basically follow your work?
So it's pretty much via the Substack now. So Traderferg at substack.com. Send out a weekly free email, which is just an article, a podcast, a quote, a chart, and a tweet that I find, and something I'm pondering that I just find interesting. I send that out weekly. And the rest is just me kind of outlaying thoughts about what I'm doing with portfolio, what I'm buying, selling, what I find interesting. Yeah, so that's where all my work is now.
Very good, good. So guys, if you want to follow him, go sign up to a Substack. And if you like, if you're interested in following him. And that's all I've got for today. So thanks for viewing. In the comments section, say go Traderferg, and we'll catch you next time.
Thanks, Andy.